Hello, friends. Good night, and welcome to another episode of the YarCrypto Late Night Live Show. My name is Groovy. I have with me here today, as always, Mr. Sterling. Hello,
Hey
Sterling,
guys. Hey, how are you?
and also Legal Talent. Hello, Legal.
How you guys doing? Also, we have here Leave Me Alone, Lemmy in
Hey,
the
what's up,
chat room.
Lemmy?
Welcome,
Happy
welcome.
birthday. He had his birthday over the weekend. Shout out to
Yeah,
Lemmy.
happy belated.
He has
Yep.
birthday on Sunday.
Happy
Happy birthday.
birthday, man. So, yeah, guys, today we have a bunch of stuff to talk about on the crypto space. And but as always, guys, let's start with the general reference on the charts here. So I have my chart up here on the screen for you guys, and this is the daily time frame. We're starting off with Bitcoin. So we have our little range here, as always, and currently, guys, we have seen that our price action maintained the structure here on this range. So we had quite a pump in the last 2 days, and now we are kind of chilling a little bit here on this area. But if we take a look here at some EMAs, uh, we are currently testing the 21 EMA once again. And the 21 EMA is kind of pushing the price down with it currently. Um, Obviously, the price is in a bearish situation, and we are kind of trading downwards, sideways, and
Yeah.
the 21 EMA keeps pushing us down even further. So right now we are trying to kind of test this area right here. Um, Another thing is, we have a lot of resistance up ahead. We have also the 50 EMA here, this green line,
Yeah,
and we also have our 200 EMA all the way up there, which is also going down. So yeah, a lot of pressure in this space here for us to actually break, and
Yeah.
we would need a lot of uh, volume to actually get out of that for sure.
yeah,
Yeah. Yeah.
exactly. And just talking about the daily chart, if I could bring up my chart here, we have something here that we've been looking at for quite some time. If I could just quickly turn off the MFI for you, the money flow index, which was in green there, we have the RSI here going back, from the beginning of the year that we've discussed and we've been kind of following and tracking. And at the moment, it does look like we are testing the resistance once again on the RSI on the daily chart here. And so, what we would like to see is, as Groovy said, we need that volume to come in. We need this little rally so we can break this area and potentially, start making a move towards the 60 and the 80 on the daily for the RSI, which we've kind of failed to cross. I would say right there since the last time was in April on the 14th. So, just to also bring some more confluence here to this EMA that we were discussing just now, if I can bring up a simple EMA right here, and
That's
we
the
have the
21, right?
21. Yep,
Yeah.
we have the 21 and the 200, as Groovy also pointed out on red above us. But right here, we do look like the previous candle did get a clean rejection on that 21. Also confluent with this area, if we look at this bigger picture that I have on my screen, we have this overall descending parallel channel that Bitcoin has been in. We had a few attempts to break out on the top, at the bottom as well. Currently, we are reaching the top part of the channel. But if we go ahead and take a fib retracement from the last touch on the top there, which is from the 12th of July, and we go ahead and draw the retracement here, we'll see a lot of confluence with this 21 EMA as it just wicks out as well on the golden pocket for this retracement. So a lot of
Yeah.
resistance in this zone is pretty much what this is telling us. There's a lot of areas of confluence, a lot of resistance to look out for. So until
But
we can get some volume that breaks us, I would say, past the golden pocket, the 21, and this kind of this diagonal line of resistance that we've been playing with for quite some time, seeing some candles close in this area above would actually make me a little more bullish.
yeah.
But right now, I'm still currently a little bearish on
Also,
Bitcoin.
though, if we could just throw up the 510 daily EMA, because I
Yeah.
see that has been supporting the price action for
So you
Bitcoin
say
during this
the
whole
the
the
500?
yeah 510 510. I'm sorry to put you
Uh,
on the spot like this and
oh
have you
no,
do it
you're okay.
because
So let me just quickly put number 4 for you here. This is actually the 510 below.
yes, see, that guy has been supporting the price action twice now
Yeah.
since we keep getting rejected from the 21 and the 200. When we got rejected from the 200 daily EMA, which is that red ribbon, correct?
Over here, this area up
Yeah.
here.
That is where we had our most bearish event since the real bear trend that started in May or April.
Exactly.
So
Which was
that
a price move of about 30%.
yeah, not only that it was such a big move to the downside though, it was more so like, well, not more so, but the fact is that rejection right there, it was our first test and we never got to see it again. We never even came close to it and we just kept on getting rejected from the 21 ever since then.
Yeah,
So
signaling that bearish momentum.
it's so showing a lot of bearish momentum. As you can see, guys, ever since we've been under the 200 daily EMA, all of our movements in our legs of price action have been greater movements to the downside and slow and portion movements to the upside, very small movements to the upside. So we're just seeing a lot of bearish momentum in general. And as we can see,
Yeah.
we keep on talking about these bullish divergences and where we're bouncing, but they don't seem to play out as much as we would see them play out if we had been above the 200 daily EMA or above the 4 hour.
Guys. Yeah. And guys, we have been talking about a sort of relief rally for the price because there has been a lot of this bearish situation as Sterling talked about, and we we needed to get some sort of move to the upside because that's just how the price action works, and you shouldn't be too surprised about it, and you should be careful about doing something about this information because the price usually does this type of movement. Usually, when we have a bunch of a lot of days with bearish situations and a lot of red candles, we usually have to see some uh, you know upside move to
Yeah.
counter that, right?
Yeah,
Um,
and my argument would be the 50 EMA. It happens to be one of the main EMAs that no matter where the price goes, it's one thing that you can be certain that it's going to retrace to at some point, in the near future. And so this is something we haven't really seen a clear retracement to the 50. And I feel like this price rally may be somewhat close to that at the moment. If you look at my screen, I have that gray line above this golden line, which is the 50 EMA currently. So, we are making a move towards it, but again, we have a lot of resistance on the way.
Yeah, I'd say it's
yeah,
definitely a possibility that we would reclaim that, but that would probably signal the real reversal, that reclamation of the 50 EMA.
Yeah, if we get the
yeah,
50 and
probably.
reclaim it, yeah, then we'll be signaling some bullish momentum to the upside, at least for the next, few days or possibly a week, given that we're looking at the daily candles.
Yeah.
Yeah. And guys, just to zoom in a little bit for on this price section,
Yeah,
I have the 4 hour here on my chart. So I'll just do the same retracement that Legal made for reference. So it's basically this swing high here
from the
from
12th, yeah.
to this, yep, to this swing low on the 20th. And if we go to the 4 hour here, guys, we bounced exactly off the 618 level, the golden pocket there. And now we are selling off a little bit and coming back to the 50% level here. I don't trust usually the 50% that much to actually hold as support, but if we get enough volume, maybe this is going to hold and we can potentially even test the 618 again. But right now, guys, I would say uh, a kind of downside move is more probable for the short term in this kind of range here.
Yeah, as part of
Um,
a broader retracement for this movement.
yeah, the only problem that I see here right off the bat is if we actually, come down here and come back up, we can potentially form a double top here depending on the state of the price action by then. So that's something to watch out for. But yeah, right now we are basically seeing a lot of resistance here in the lower time frames as well.
Yeah,
And we're gonna have to see where this lower high is gonna actually go. But just touching as well on the RSI, guys, as Legal and Sterling were talking about, the RSI being a little bullish on the higher time frames here, especially on the daily, uh, s- as we talked about a few days back as well. This is a sign of accumulation, guys. But usually, sometimes we don't see the result of that accumulation for a very long time. And talking about accumulation, there's some things here that I want to show you guys. And the first one is this article here on Cointelegraph.
yeah,
And it's saying basically that talking about how the Bitcoin price hits 32K, but the derivatives metrics still show signs of weakness. And they continue saying here that although the last months have been a lot bearish for BTC, the derivatives indicator has have been relatively neutral. So, but now, after 2 months of struggling to sustain 30K support and finally losing it on July 20th, the futures premium and options skew turned bearish. And they also say here that the on-chain analytics show that the monthly average of 36,000 BTC withdrawn from exchanges usually interpreted as accumulation. However, this superficial analysis fails to acknowledge the increased use of tokenized BTC in decentralized finance or DeFi applications. So they basically pointing out some failed uh, interpretations here of this type of data, and this can lead to a lot of misunderstanding about what the on chain and what's going on behind the price action. So they clarify this here very clearly, and they continue saying here that this chart above here shows that 40,660 BTC have been added to Wraps BTC and RAN BTC over the past 3 months. This number does not consider deposits at BlockFi, Nexo, LAN, and the multiple services that provide yield on users' cryptocurrency deposits. And removing BTC previously deposited on exchanges could be a sign that traders' intent to sell in the short term is reduced. Still, at the same time, it might also represent investors seeking higher returns in other avenues. In short, these coins might have been sitting on exchanges as collateral or as long term holding. So that's basically this about the whole situation here on the DeFi as well. But yeah, guys, this in short, this article here is saying that the there's other metrics that we can look at, and there is some bullish signs as well uh, on these types of metrics. But the on-chain uh, continues to show a little bit of accumulation, right? But we always got to look at some other data as well.
Right.
So what do you guys think about it?
Yeah. Um, well, so basically, it's just saying that even though the on-chain data is suggesting that coins are moving off of exchanges to be held in cold storage, the signs for the futures markets is not necessarily the most not necessarily reflecting that data.
Yeah. Yeah, the derivatives indicators here, as they are showing, it shows a little bit of bearish situations, especially this chart here.
But we also got to take into
Because
account. Sorry to cut you off, Groovy, but
oh yeah,
I just
yeah,
want to
go
mention
ahead.
before we start talking about it that we have to take into account that the futures markets are not necessarily like people hold USDT to be trading in the futures markets, or they hold USD to be
Yeah,
like on Femex, you hold USD to trade in futures. So you don't necessarily have to have crypto on the exchange. You could have took your crypto out and kept USD on the exchange, and the on-chain data will not show the entire liquidity. They'll just show BTC that has moved from the exchange and gone to a cold storage wallet. So that's important to keep into account. That's probably why we're not seeing that same data reflect in the derivatives markets as
yeah,
we thought it would.
yeah, for sure. Yeah, they say here that there's enough evidence of bearishness in the futures and options markets, and this hasn't been the case for over the past 2 months. This suggests that even pro traders lack confidence after the 30,000 support failed to hold in the past 48 hours. So yeah, they're basically saying because like this price action, it's it's hard for us to actually be confident in upside moves with this type of price action. Unless we see a lot of volume coming in and actually retaking some strong areas here, it's very hard for traders, I think, to be confident on this type of situation, right? But
Yeah.
to kind of counter that a little bit, guys, we also have a few
Oh, hey,
tweets here.
yeah, really quick.
Yeah,
Because I was gonna say the tweet that we have by Will Clemente, there actually kind of goes contrary to that because it says here in short-term price action doesn't invalidate broader trends. The price can diverge from underlying investor behavior just as it has for the last few weeks, but not forever. Against popular belief, I still see a supply squeeze in play and continuation of the Bitcoin bull market. And so this goes to the old adage, the slow trend is the true trend. And if we look at the bigger picture, we can surmise that there's a possible,
Yes.
still broader uptrend for Bitcoin.
Absolutely. I mean, even
yeah,
if we look at momentum oscillators on like the daily or the 1 day chart, I mean the daily time frame or the 4 hour time frame, we'll see like on the MACD histograms or on certain momentum oscillators, you'll see massive bullish divergence forming. But every time we think it's about to play out, we do hit some resistance. But eventually, it's going to play out. I mean, this is exactly what we were seeing when we were at the high 50s or the 60s, when
Yeah.
we were at the top of the last bull run, the last bull
yeah,
market. So we were seeing basically the same thing, a very slow but sure indication of a divergence.
Yep.
yeah. And even and another thing to also complement this, guys, is this chart here from Glassnode. Let me actually zoom in a little bit here for you guys. And there's basically saying here that the short-term holder MVRV measures deviation of price away from the realized price. So, and I say here that very low values indicates that short-term holders are holding coins significantly below their acquisition costs. So basically, people who bought at the at higher levels and now they're just holding it at below that the entry points. And in bearish trends, this has typically aligned with the key with capitulation events. So we see here that this green area here are when there's a lot of coins being held below the acquisition that they basically were bought.
Yeah.
So you guys can see that every time we hit this sort of green zone here, the price usually reacts to the opposite direction, right? So
Yep.
upsides, and the red zone here is when people are basically in profits. So people who bought at a price and now the price is way higher than their entry and they are in profit.
Yeah.
And this could signal a lot of profit taken, uh,
Mm.
Now,
as we see here.
full disclosure, I'm one of these people, that I do have not a lot, but I do have some of the Bitcoin that I bought at a much higher price, which in my mind, I could have sold at a loss on the way down, but I'm looking at a bigger picture here. I'm looking at the overall underlying strength of the asset and the fact that I'm going to be investing for the longer, broader period. So selling it would be unwise, knowing that I'm going to be holding it till we reach higher, prices and back to those levels.
Yeah.
Yeah. And something to keep in mind, guys. Obviously, we are still in danger of even more downside for the
Mm-hmm.
price, because of all the fear, because of everything that's going on, the sentiment. But I would say that the danger we are at in now, it's basically lower than the danger we can be when we are at the red zone here. Because when a lot of people are in huge profits or even just profits, the danger of the mass sell-offs, as we saw on 2017, and as we saw this year as well, is way higher because uh, this basically people triggering a lot of coins into the market and the price can just plummet from there, as we saw. So
Yeah.
right now we are in a little better situation, um,
Yeah.
but still uh, we
So
can
yeah,
see a
maybe we
lot of
can also bring up the Ethereum chart because Ethereum is another asset that we've been following closely, and I have here on my screen what we have is a fib feed speed fan retracement. So if we go here under the third set of tools, we have a tool here called the fib speed fan retracement, and what it does is essentially it helps you project the price of an asset after a major down move, like the one we just had here, where it kind of looks like a vertical wall. And usually, what you do is you take the first point of the height of the movement, and then the second point would be after the first bounce that we had here, which is over here on this first bounce. And as you can see here, we had the golden pocket, which I've highlighted that we normally use in most of our fib retracements. I have the 382, the 50% one, and a golden pocket, as well as the next step up, which is the 786. And for a while there, we so many days, once we got into this zone, we were kind of trapped. And as you can see here, every time the price gets to one of these lines, we get a little choppy, but then there's kind of like a clear move to the next line, then we get a little choppy, another clear move to the zero point 0.5 fib, and then we kind of get stuck in that zone and sort of like a broadening wedge. And then finally, when we break out, it's another clear movement to the next fib level. But as you can see, we got trapped again once inside this. We got trapped once again inside the golden pocket. But the last few days we did make a break for it, and in my mind, given this retracement, there's nothing but clear skies ahead. But we do
Yeah.
have to keep into account these more dynamic, fib levels and EMAs that are going to be coming up as resistance. At the moment, we have the 21 that we spoke of on Bitcoin, but it does look like Ethereum managed to get past it on the daily. So, there's going to be some differences in strength across these assets, and always going to be some different trading opportunities to hedge your bets as well.
yeah.
Yes.
Do you
And
see anything?
another thing, when it comes to that fib speed resistance fan, it's basically like wherever you make the retracement from, low to high or high or low, the middle of each fan line is going to be the same as where the fib level would be if you had made a regular retracement. So the middle
Exactly.
of each line will be lining up with that level where the price would have hit, and you'll it's basically using the same formula as a Fibonacci, but just
Yeah,
in a different way.
Yeah,
exactly.
I
Projecting the
would
lines.
say if it if it weren't for the whole sentiment of the market right now, I would say this was a very clear opportunity for actually Ethereum to um, steal some of the market cap from BTC,
Yeah.
um, because of the whole sideways movement on BTC. But we are seeing a lot of not
Actually,
it not happening that much,
it,
but
if you go, if I don't know legal, if you still have that EMA tool up, but if you
Mm-hmm.
turn on that 300 daily EMA, Ethereum and the crypto total market cap, excluding BTC, are both bouncing. So basically, Ethereum and the altcoin market cap are bouncing on the 300.
Yeah. So if you
That's what
guys see here, the 300 I've isolated for you as this blue line, and it looks like we found a nice clear bounce on that at the moment.
mm, yeah, something you gotta be careful is with these EMAs are you know um, because how many data points do we have before that to indicate that this is a valid point of potential support for us.
That's the thing
Yeah.
about
um,
using EMA strategy is
yeah,
basically you have to, like if you're going to use a specific EMA that seems like something that maybe a lot of people haven't used before, it's fine, but you have to. EMAs are meant to find the trend, so you do have to go back in
yeah,
time and see how the price had a relationship with that EMA before.
Yeah.
It might not
And
be the same exact relationship that it would have with the 200 or the 21, because even the
yeah,
200 and the 21, the price has a different relationship with those as well.
yeah, and
yeah,
and also just to touch on what Groovy said, on being careful, the one main aspect that we have to keep in mind is that the majority of all these indicators that we look at, they're lagging indicators, especially when you start looking at the larger, EMAs. They're going to be longer periods of time before we see a reaction to the EMA, since we are looking at 200, 300 candles before there's a actual reaction. So it is the average of a larger time block.
yeah. Also, guys, we gotta keep in mind that EMAs are very psychological based indicators, as many of as many other indicators. But
Yeah.
basically, when we have the famous quote unquote EMAs like the 21 daily, the 50, the 200,
Yep.
we see the price actually reacting to it because the psychological effect that it has on the market. Um, and it can take a little time, but when we look at EMAs with a little uh, with people that are not used to use it that much, it can be a little
I
sketchy to look at. But yeah, that's basically the EMA that we gotta the strategy that we have to keep in mind.
Yeah.
yeah.
But
I'd
you
also
know
I'd
guys,
also
yeah,
I'd
go
also
ahead.
say that when it comes to this current state of the market, we were talking about news before, but in my opinion, a lot of the stuff, at least in terms of the US news regarding cryptocurrency and the crypto markets, it's not been terrible and it's not been overly FUD. Um so I really think that the reason we're trading the way we are and we're seeing these kind of patterns and these reactions to certain levels is really just traders doing it. I really think that if it wasn't for the traders, Bitcoin would probably be much at a higher price. But the traders want to see stuff play out, and
Yeah,
there's positions in the market that need to be the liquidity needs to be cycled back through, and there are certain positions that just need to be cycled back into the market before
yeah,
certain things happen.
we lost a big part of the retail investment on the market, right? Especially because of the fear.
Yeah.
Um, so yeah, that's a big reason because traders usually they trade or they are supposed to trade both bull markets and bearish markets. So basically, we are gonna have traders trading in this type of situation as well. But the the retail and the hodlers, uh, they are much affected by the sentiment on the market. And
Yep.
uh,
Even more so than the long-term holders and the people
yeah,
that are trading for more day trades
yeah, for sure. So
and
yeah,
intraday. Yeah.
um, that's why we are going to need some big news to actually bring the retail and the FOMO into the market again.
Yeah, and so
But
to touch on that a little bit, we do have some news about BlockFi. You know, we talked about BlockFi a few times in terms of it being a great place to kind of stake stable coins and whatnot. But at the moment, it looks like, you know, we are having some friction in the United States, and we have a couple of, a few states at the moment, you know, imposing regulations and trying to stop them.
Sorry.
But you know, before we go into that, let's check out the total market cap, because this goes into what we were talking about with the EMAs and everything else. So I believe you
yeah,
have a chart for that, Groovy.
yeah, I just wanted to quickly check on some things here on the charts.
Yeah.
And the market cap here, we are seeing the crypto total market cap right now.
Yeah,
And the two EMAs that I have here are basically the 21 on the weekly here and the 50 on the weekly as well. So if you guys can see here, we lost the 21, and we kind of retested it as resistance, and we lost again. So now we are basically going down as well again, and we kind of tested the 50 here, and now we're that relief rally that we talked about. We are seeing a little bit of upside, a little bit of supply absorption here, um, but this 21 EMA it's supposed to act as resistance now for the whole crypto market cap.
yeah,
But as you guys can see, it's just a lot of weeks of just bearishness all over here. Not really much upside momentum. So I think we might get a little relief rally, at least to the 21 here again.
yeah.
Um, yeah, and we'll see what happens after
And
that.
yeah, based off of that liquidity absorption that you see there on those three wicks, you know, that does tell me that they do favor the price not to go lower. And so at the moment, you know, again, what we were talking about before, I really do feel like we are in an accumulation phase, and you know, we are seeing there's a incentive to keep the price at these levels, so that way they can buy more and more and kind of sort of stock up and hodl away, because we are seeing this increase in these larger wallets that are not selling and don't have a history of actually selling.
Yep, for sure. And also, we see confluence here on these wicks and this 50 EMA here, because this area it is confluent with our support areas, our major support areas and demand zones on BTC. I would say on Ethereum as well.
Yeah.
But just to continue here, we also have the DXY here that we have been talking about, and
Well,
starting
really
off.
quickly, just before you go to the DXY, just to point out one
Yep.
more thing about the 50 EMA. On
Mhm.
my chart here, I have the 50 EMA on the crypto market cap. Were we looking at excluding or with BTC?
When we were looking at the crypto total market cap, excluding BTC, when we were talking
Okay.
about that 300 EMA, but Groovy is
So,
currently talking about the
yeah.
actually the entire crypto market cap.
Yeah, that's entire. Yeah.
Yeah, so because I'm looking here at the weekly, and also, you know, excluding BTC, the one note I wanted to make about the 50 EMA, which is part of a bigger strategy, as part of trader reality strategy, which, you know, a few people may not be aware of. But the one thing that to take away here is that as part of this indicator, we have a Bollinger Bands around the actual 50 EMA, and to consider a retest of the 50, technically we would just need to wick out or touch anywhere in this purple zone. So I would call this a confident retest of the 50 in my eyes, based off of just a theory that there is a zone around the 50 in particular, and generally the price doesn't have to exactly touch the line to be considered, you know, testing the 50 in the zone. So that's also one thing to maybe
Yeah.
keep in into account as well, in terms of considering the retest.
Yeah, and especially when we talk about crypto market caps, because there's a lot of things involved in that. Uh, Sometimes it's not gonna respect these EMAs uh, as well as a asset per se, because
Yeah, traditional
assets,
assets. Yeah,
yeah, because there's the whole trading aspect of it and orders and stuff like that. So
the
that's
increased
something to keep in
volatility of the
mind as well.
futures. Yeah,
Yeah. But yeah, just to give a little update on the
DXY.
DXY here. We have been following this W pattern on the DXY, and we are kind of reacting to this zone here of on the neckline. We can consider this to be the general sort of zone here
Yeah,
of resistance that we have on this weekly. And we have been a little bit rejected by it on this current weekly candle. If we zoom in on the daily, you guys see that this range here is valid. Um, and that rounded top that I was talking about with you guys a few days back, this might actually play out if this gets rejected hard from this area, um, and we start going to the downside again. So this is a very critical moment for the DXY, this resistance here, and we are going to see in the next couple days or weeks if we break this or if we get rejected and get back down, because it seems like we made a lower high here so far. So
yeah,
yeah, that's something to keep an eye on.
Definitely.
Yeah. So yeah, moving on to the news, guys. As Legal mentioned, we have the BlockFi situation, um,
yeah,
starting with the a few regulation aspects here. And the first article that we have here is the Alabama issues show cause order to BlockFi. So basically, the Alabama Securities Commission alleges that BlockFi has funded cryptocurrency lending in part through the sale of unregistered securities. There's not much information here. It's sort of a short article, but they say here that the um U.S. State uh, is concerned about its interest-bearing crypto accounts may be unregistered securities. So they are seeing some problems there on the state, and
yeah,
also,
and it seems like
yeah,
it's this distinction between the actual type, so the type of asset, and if we look at the article that I believe you're going to bring up next about Texas, which is having similar issues, there. So I'm not sure if you have some stuff highlighted there for the Texas article.
yeah, I think, yeah, might not, yeah, I didn't
Yeah, because the
highlight
the
here,
one
but
main
yeah,
takeaway I have here, is that BlockFi is saying that their interest accounts are not securities, that they're just interest accounts. But, at this point, it's up to BlockFi now to kind of answer for it and kind of prove that, hey, how can you prove that it's not securities? And then we can move from there. So at the moment, they're in the hot water at as it looks like.
yeah. Well, they need time to figure out what to
Yeah,
do, and but they are getting a chance to actually respond to the allegations. It says here
yeah,
that this legal action affords BlockFi and its affiliates the opportunity to respond to our allegations and present admissible evidence. So
yeah,
we're gonna keep an eye on how this is gonna play out. But
yeah.
BlockFi, they have been pursuing their plans to go public, even with the regulators closing in. But if they this might get resolved soon. But this article here says that the BlockFi aims to go public um, in 12 to 18 months, according to documents circulated to investors Wednesday amid growing regulatory scrutiny of the cryptocurrency lender. So yeah, this if this if BlockFi goes public, then it's going to be the third crypto company to actually go public, along with Coinbase. And what was the other one?
I'm not sure if it was Gemini or not.
No, it wasn't Gemini, but
Yeah.
yeah, I forgot the other company who went public.
Coinbase.
Circle, wasn't it? Circle, I think it was Circle. But you know,
Yeah.
this might be something very nice for crypto as well. A lot of companies going public. And moving on here, we also have this JP Morgan news.
Yeah, JP
um,
Morgan, some on the more,
yeah, JP Morgan,
bullish
yeah.
news for Bitcoin, because we are getting a lot of bearish news, but along with a lot of other banks that we've been bringing up on this live show, we have JP Morgan kind of joining the fray here.
Yeah, JP Morgan's retail customers can now tap crypto, just not directly. So they will let wealth management clients invest in Grayscale and Osprey crypto trusts. They say here that the mega bank will also help retail clients invest in GBTC, Grayscale's Ethereum trusts, Bitcoin Cash trusts, Ethereum Classic Trust, as well as Osprey Bitcoin trusts through their brokerage accounts. So yeah, this is very very important for, if one more step towards retail adoption.
Yep,
So yeah, this is very nice news as well. Little by little, we
exactly.
are seeing um, people adopting, and banks, and centralized institutions uh, paving the way for the retail to actually get into crypto.
Yeah,
So
and to gain the confidence again, because we are seeing that exit from the crypto scene at the moment, from the more like lesser, I guess, um trade or lesser known traders that are new to the scene, so we want to see them get back in and that liquidity to jump back in. We're looking at a $1 trillion that has exited the market, since the all-time
yeah,
highs that we were just at. So it would be wise to get that money back in there.
Yeah.
yeah,
And then there's also I had one article that I wrote recently for YarCryptoNews.com, and basically it was just talking about how Janet Yellen, the U.S. Treasury Secretary, wants to basically implement more strict regulatory frameworks for stablecoins. Now, the thing is, they basically just want stablecoins like USDC and USDT to face the same type of regulations that any payments or money transfers from a bank would face.
yeah,
So that's really, really the gist of what she's saying. And the Bank of England also said the same thing, that they want to basically have stablecoins face the same type of regulatory frameworks that money transfers from banks would see. And then, so there is some truth to the fact that there is literally not any clear regulatory frameworks for stablecoins or crypto in general in a lot of cases. So it's understandable that the U.S. Treasury Secretary would say such a thing. But overall, from what I've seen in the U.S., generally the people at the top, like at the top of the SEC, as well as mayors across very smaller cities, like for example Miami, the mayor of Tennessee, Jackson, Tennessee, also wants to turn his city into a Bitcoin hub. And then you also have somebody like Andrew Yang, who was running for president. I mean, I'm sorry, he was running for president, but he lost that, and he was also running for mayor of New York City. And he was
Yeah,
also saying that he wanted to turn New York City into a crypto hub, which is just it's really like, the fact that these people are saying this, there's a lot of positivity there and for the crypto space and the crypto industry, and it's really not all dark rooms and
and FUD, yeah.
yeah,
yeah,
So
yeah. Little by little, because the crypto space is here, and people gotta just if you can fight it, you just have to uh, get some
Yeah.
ways to
There's
live with it.
compromise. Yeah,
And
there's ways to
yeah.
compromise, really. Like, people have to understand that. And when crypto was first, um, like when we had our recent bull run, and same as 2018, there was so much FUD. It's way worse than 2018, in my opinion, the FUD. But
Mhm.
it leads to the traders to this at the top. The traders will trade off of any FUD or any piece of news that could be considered FUD, and then once they're really hitting those targets for um, their shorts and whatnot,
Yeah.
if they go too far, then it sends us into a bear market, and the traders trade against it's in favor of a bear market, so they'll keep their shorts running. So that's really what we saw in 2018, and that's what we saw this past year in 2021. However, I think that people are going to realize that there's room for compromise and
Yes.
cooperation and collaboration.
Yeah.
And crypto is all about innovation, so there's that too.
Yeah, for sure, guys. But yeah, this was all that we had for the news side of things, guys. We are gonna keep you guys updated on everything that's going on, because if we do get the much needed news to bring us back up on this chart here, um, we are surely gonna get you guys updated on that as well.
Yep.
But yeah, guys, this was all that we had for tonight. Thank you guys so much for watching. Whoever appeared on the live stream, if you are watching on YouTube as well. And if you guys want to see any more content, you can access yarcrypto.com. We also have our news website, yarcryptonews.com. And we also have our Discord community, where we talk all about crypto related stuff. So if you guys want to talk about crypto, learn about crypto, you can join us there. We are there every day, talking about TA and doing trades and stuff. So if you are interested in that, the link is in the description. So yeah, guys, thank you again so much for watching. Good night to you guys, and bye bye, guys.
Bye, guys. Take
Bye,
care.
people. Have a good night.
Have a good night.